We can start. Fantastic. Oh, can I do webcam? Can I do webcam with this? Is that possible? Is that an option? Pause, assign, share. Not now. Okay. I even shaved. Try to make my mug look good for this. All righty. Let's go ahead and begin. Hello, everyone. Welcome today. Welcome, everyone. As we need to setting it before started. Copy that. Copy that. Okay. All right. So we are going to go ahead and begin. So my name is Chris Capre. Welcome to How to Day Trade Stocks. This is my first time back at FX Street and might be close to a decade. It's been a long time since I presented at FX Street. And I had heard through the grapevine that they are now actually focusing heavily on people are very interested in crypto and in stocks. And so we thought we'd do a presentation on this. Let me just see if I can get this window popped up a little bit more. Okay. Doesn't seem to allow me to pop it up as much as I like. So fair enough. Fair enough. Okay. So welcome to How to Day Trade Stocks. For those of you that don't know who I am, I'm just going to do a shameless plug here. So I've been trading for 21 years. I am a former broker on Wall Street. I was a broker at FXCM, not just on Wall Street, but then their San Francisco office from 04 to 06. After that, I traded for a hedge fund for a year. It was a FX hedge fund at that time. And I opened Second Skies in 2007. I'm a verified profitable trader. We posted our track record last year for our entire year. And we also posted our Q1 performance for this year. We're going to do Q2. We're going to do it quarterly, basically. But I'm a verified profitable trader. And so this way, not only am I someone who has a vast amount of institutional experience, but I'm someone who actually makes money trading. And I don't know of many people that actually post their verified track records for a year plus. So I think there's like less than a dozen of us who actually post their track records. So with that being said, hopefully that gives you some sort of assurance that I actually know what I'm talking about, because trading is one of those things where experience matters. We're going to be talking about how to day trade stocks. And it's important that we clarify when we talk about day trading that there are several forms of day trading. And it's important that we clarify what form of day trading we are looking at and are talking about. And so this way you kind of understand, hey, this is what I'm referring to. So there is generally three referred to as three types of day trading. There is generally scalping, which is basically you're in and out within minutes, maybe 1 to 2 minutes. If you're lucky, you hold a position for about 5 minutes, but that's pretty rare as a scalper. And scalpers can trade anywhere from 10 to 100 plus times a day. I have a student of mine who has gone professional. He is a professional scalper. He even has his own prop firm now, and I think it's in Malaysia, if I'm correct. And he does 100 to 200 trades a day, every session. And that's scalping. And the whole point of that is to get in, get out, be fast, catch a high momentum move, be done with it. If the Momo's not there, you're out of the trade. So that's scalping. Then we have a version of day trading called short-term day trading. That's where you could be trading for 20 minutes, 30 minutes, couple hours on a single trade if it's a really good runner. This is what we call short-term day trading. And then we have what we call day swing trading. Day swing trading is basically you try and buy it early in the session, maybe pre-market, maybe opening drive, and you will hold it for the majority of the session. You will be flat at the end of the day, but you will hold it for the longest portion of the session. Or if something has full, if the position is unwound enough that you feel like, hey, I want to be out of this. Those are the generally referred to as 3 types of day trading. And we're going to be talking about mostly the second version. We're not going to be talking about scalping. Part of the reason is because scalping, I don't think, is accessible for a lot of people. And part of the reason why is, first off, you need an absolutely gangster connection to do scalping. You have to have fiber plugged into your building, into your house. And most people don't have that kind of access. You need a super fast broker. You need a super fast data feed. You need a lot of, and you have to have hotkeys, and you have to be able to make decisions super, super fast. Most people just don't fall in that category. So we're going to be talking about short-term day trading and day swing trading, which I think is more accessible to everybody. And so that's what we're going to be covering. Now, if you are going to day trade stocks, you're going to need 4 skills in place to day trade. If you're missing any one of these skills, you will have major challenges to being profitable. It will be a massive uphill climb. So the first skill that you're going to need for day trading, and we're going to get to charts very shortly in about 5 minutes, but let me just kind of run through the primers here. So the first part is you need a selection process. You need the ability to select what stocks you trade. In the US, there are over 30,000 stocks. How can somebody look through 30,000 charts to decide what they want to day trade? You can't. So you need some sort of tool or app or mechanism to scan through and filter all these stocks and then help whittle it down to the top movers for the day. If we're day trading, we need something to move up or down. And so we're going to talk about that selection process, what tool I use, and how I use it to find the best movers of that particular day. Once you have selected your stocks that you are potentially going to look at, then you need to analyze the price action and the order flow, and you need to do that pre-market. You need to do that pre-market because you're going to know, by knowing what the volume is pre-market, you can kind of tell whether this stock has a lot of institutional eyes on it or not. If it doesn't, you need to move on, regardless of how good the structure looks. If it's got a lot of eyes in it, that's a stock that can produce a lot of setups for that particular day. And so if we have stocks that we're able to, that we whittled it down now, we've gone through our selection process and we've whittled it down. Now it's time to briefly look at the price action and order flow. And I'm going to teach you my process for doing that pre-market. The other 2 skills you're going to need to day trade stocks is you're going to need tape reading skills. That means TNS, which stands for time and sales, and that means level 2. And you need legit level 2. It can't be just broker level 2. It has to be actual level 2. So it's pulling from all the exchanges. Time and sales, super important. That's telling you what transactions are going through the market right now, at what price, and what kind of size. These are tape reading skills. Tape reading skills is important because it's going to tell you what's happening in the order flow right now. It's going to tell you whether this is something that is a mover or not. I mean, how many times have you traded a breakout pattern that looked perfect on the charts? Absolutely looked perfect on the charts, had everything in alignment, it was with trend, everything was good, and yet the breakout just didn't really materialize, or it didn't really go anywhere. Well, that's where tape reading comes in. You'll be able to, through reading the tape, see in real time what is going to move and what is not moving. This is super, super important. And the last skill you need to day trade is executing your edge. You have to have a strategy, ideally multiple strategies, but you also need skills to be able to see what's happening with the price action and trade that to your advantage. You have to be able to execute your edge. And I've always said that strategies come and go, skills never die. Why a lot of people say, well, you need a strategy, you need a strategy, you need a strategy. Yeah, strategies have lifespans of 6 to 18 months. Hedge funds have strategies that last 6 to 18 months and they have to recycle and find a new one. That's why it's not so important that you focus on the strategy. It's more important that you focus on your skills and you're able to execute that and find opportunities in the market in real time. So those are the 4 skills you're going to need to day trade. We're going to talk about tools, and then we're just going to go straight into charts, and we're going to go over this point 1 here, selection process, and point 2, what do I do? What do I use for my selection process? How do I analyze it? And then how do I trade that? So the tools you're going to need to day trade stocks, very straightforward. You're going to need a scanner. There are some free scanners out there. We'll talk about a free scanner. I use a paid scanner. We'll talk about that. And the scanner is something that really helps kind of parse through information and give you the most important information so you can decide very quickly hey, this is something I want to trade, or this is something I don't want to trade. Other tools you're going to need for day trading stocks, you need VWAP. So that's volume weighted average price. That is a super important indicator, partially because flows react to that heavily, partially because it gives you information about the order flow through the volume of shares traded at that price over time. So this is super important. You're going to need volume, and it can't be broker volume. It has to be actual exchange volume. So some brokers will say, hey, this is volume, but it's really just the volume being shared amongst their own client pool. You need volume that is actually coming from exchanges directly, because that will tell you the overall volume. One broker is a very small lily pad in a giant ocean. You need to see what's going on in the entire ocean of volume. And the 9 and 20, those are EMAs that are excellent for day trading. We're going to talk about that. We also talked about how you need time and sales on level 2. And then the fourth tool that's very, very helpful, that is super important in my opinion, is option open interest. Why is option open interest super important for day trading? Well, it's actually very straightforward. Option dealers and market makers are some of the most active players in the market. They are constantly hedging every single day, and they have to be flat at the end of each day. So they are constantly adjusting position. If I go into the market and I buy 100 calls, that option market maker is now short 100 calls. That means they have risk. They have, if the market goes up, they have risk. So how do they neutralize that risk? They will then either offset that by going long futures or long stock. And so they will be active in the markets. Every time somebody's making a trade, they're going to be offsetting that position. They also have a book themselves. And so because option dealers and market makers are incredibly active in the markets, it helps to understand what's going on with option open interest, because those flows have a huge impact on how stocks move on that day. So any questions before we move on to the next section? The first question is coming in from Peter KW. He says, all tools are free. Most of these, if not all, you can get for free. You can get a scanner for free. I prefer the paid one because it's a little bit more efficient. VWAP should come with your broker platform. So should volume. 9 and 20 MA are free. Time and sales in level 2 should come with your broker. My broker, Thinkorswim, which is with TD Ameritrade, they have a scanner, although I don't use it. They do have it. VWAP, they have it. They have volume. They have the 9 and 20. They have time and sales. They have level 2. And they have a decent option open interest tool, which we'll get into. So yes, you can get these tools for free. However, once you start making money, once you become profitable, you're going to realize it helps to have better tools, and you will pay up for them because these tools pay for themselves. There's so many times where, how many times have you ever run into, like, you're long or short a particular stock and you feel like, hey, this thing's going to, push to the upside, and then it just runs into a wall of sand. Like, it just isn't going anywhere. Well, it's possible time and sales was showing that there was, and L2 was showing there was a large seller on the offer there. Maybe there's also a lot of option open interest where dealers have to hedge at that particular price. This is very important information to have. So yes, you can get these tools for free, but once you start becoming profitable, you will pay up for them for sure. Okay, so we've gone over all that stuff. That is all the slides. It is now time to look at, we're going to go over parts 1 and 2. Is there a way to move this tab? Can I? Yes! I'm getting better at this. Okay, I'm still sharing screen for you. You guys are still seeing this Benzinga app gray dark screen, yes? Is that correct? Let me know in the chat. Okay, thank you, Akira. I appreciate it. And thank you to FX Street Admin. Okay, so we talked about the first tool you're going to need, which is a scanner. You need something that can filter out news and information for you. My preferred scanner is Benzinga Pro. You can get a scanner through TradingView. So TradingView has a scanner, which you can use a stock screener, and you can set up your filters in pre-market or post-market. So it's a decent It's a decent free scanner, but I prefer the paid one of Benzinga Pro. And here's how mine's set up. I have 4 sections you can see here. I have newsfeed, details, which I'll get into in a second, movers. This is kind of, these two are the most important, and then earnings. Okay, so breaking down each one piece by piece, newsfeed, absolutely essential. I can't have 10 TVs up. I don't want to have 10 TVs up listening to all the news. I want somebody that's going to filter all the most important news to me coming through right now. And you can see how this is updating. And so if a ticker shows up red, it means that this is bearish on the day. If it shows up green, that's bullish on the day. But this will give me all kinds of important news, and I'll show you how this matters in a moment here. But this is great because I can click on anything here. Bookkeeper shares are trading higher after the company reported better than expected earnings. Wow, that's really interesting. Maybe I want to take a look at that. I just click on that, and it shows me a chart right here, a trading view chart. Pretty cool. So any news I want to see, it can show me that right away. Let me line this up a little bit here. Okay, and it even has the kind of news right here. So I can see in the chart, hey, it's bullish on the day. Maybe I want to trade this. That's the power of the news thing right here. My most important section, to be honest, though, is the mover section. So this one, I can set it to, I have a pre-market, but now we're in the regular session. So I click on the regular session, and this is going to tell me what are the top movers, and it's going to show me some very important things. Volume and average 30-day volume, and then percent change. This is where I do my selection process for the day. First thing I'll look at is volume. What are the top volume movers on the day? Top volume movers matter because they're telling me where is the largest amount of institutional interest for that day. This thing is only looking at stocks from, if I'm correct, a price of $300 to $500. So if a stock is over $500, it's not going to look for it. And it's looking for anything in terms of market cap. So any stock between $300 and $500, this is looking for it. And it's looking for the top volume movers and top percent change movers. So I can see that LHDX is a top mover on the day. Its average volume is 638,000 shares. It's clocking in at 47 million. That's a lot of volume for the day. That's like what, almost 100 times its average daily volume. A lot of eyes are looking at this. So what do? I click on it, and I can see that this is in an uptrend, and then that can give me an idea to potentially look at the chart. So this is how I go through my scanning selection process. Another stock we're looking at, Fubo. Average 30-day volume is 14.7 million shares. Right now it's trading at 24.6 million shares, and the market's been only open for 45 minutes. So it's already almost 100% over its average daily volume. And so we can see Fubo shares are trading higher after the company reported better than expected Q1 sales. So this might offer me a potential trade idea. So I have LHDX, I have Fubo, and I have a few other movers on the day. So this is my scanning selection process for day trading. Any questions on this before we move on to the next one? If there are no questions, just let me know. Just hit no in the chat, and then I will know that you are all awake and that you have no questions. None? All right. So we've found a few stocks that are moving, and we also have another one here that's kind of interesting. This is a stock I'm in right now, Occidental. So let's take a look at LHDX, Fubo, RMED. Why are you ripping? Raw Medical Systems are trading higher after the company reported better than expected earnings. Okay, so let's take a look at this in the news section so we can dial into the details a little bit more. Resume trading. So they've been halted already, up 69% on the day. Let's see here. What's the earnings? Reported a quarterly loss per share, which beat. Okay, so they were expecting a bigger loss and it beat it. This is a 342% decrease over losses. Okay. I reported quarterly sales of 1.1 million, which beat the analyst consensus of 99,000. Okay, this is something that beat it, but still kind of poor earnings. I feel like we'll probably pass on this. So I will look at LHDX and Fubo and OXY. All right. LHDX. This is TradingView, by the way, in case you don't know. OXY, which we are long, and OXY's ripping. I love you. And Fubo. It's our top 3 stocks on the day. Okay. Akira and Siki's asking, so out of the 3, do you concentrate in one of them? Do you mean out of these 3 stocks, do I concentrate on one stock? Just to clarify. I know there's a slight delay between. Yes. Okay. Yes, that's a great question. I will look at the one that is the most bullish, that has the most support, that has the overall the best profile. So yes. So let's look at all 3 in order, and then I will tell you which one to me is my top one for the day, at least in terms of the 3. Other trades can come up, but LHDX, Lucira Health, this is one that I think, if I remember, it doesn't have earnings, but it has earnings for tomorrow. So earnings hasn't come out, but it's building momentum ahead of earnings. So we don't have a news catalyst, but volume is good. Volume's really good, but we're not getting a news catalyst. So let's see. Earnings are probably coming out after market. Let's check right here real quick. LHDX. Okay. So let's see here. So it's tomorrow. Okay, so that's why. So earnings are tomorrow. So we got no positive news catalyst, but there's a lot of volume building ahead of it. It's possible somebody knows something ahead of time, or it could be one of those buy the news, kind of sell the fact once the earnings come out. That's what's happening. So let's take a look at this one here. I'm going to mark the highs, pre-market, and the session thus far, which is 737. Then I'm going to step out to the weekly and see what kind of price section we're in. We're in a pretty big downtrend. We're in a very big downtrend. However, we do have the first weekly candle that has broken the highs of the prior week and is above it right now. It's been a while since it's done that. So there might be some bullish momentum here, but this thing's in an overall downtrend. So I feel like this is a weaker potential play because we don't have the positive news catalyst. The earnings isn't out till tomorrow, and it's kind of in an overall downtrend. So weak candidate. Let's pass for right now, and then we'll take a look at the others and decide. Occidental. So Occidental, the volume on this one right here is 6.3 million. Its average 30-day volume is 18.7 million. And so right now it's at 1/3 of its average day volume. We're only 45 minutes in the session. It should probably hit its average 30-day volume. So not gangster in terms of volume, but not bad. When we look at the weekly, this thing's in a relatively overall uptrend. In the last 3 weeks, it's been gaining. So overall, this is a far better candidate than LHDX, in my opinion. And so we will come back to Occidental on the 5 minutes shortly. Let's briefly scan Fubo. Hassan, forgive me if I'm mispronouncing your name, Mernij. Hassan, I'll just say Hassan. For the charts, what time frame are we looking at? Great question. I look at 4 time frames and 4 time frames only. For day trading, I look at the 5-minute chart. For short-term swing trading, or maybe short-term day trading, I'll look at the 1-hour chart. My medium time frame chart is the 4-hour, and my higher time frame chart is the weekly. So those are the 4 time frames I'm looking at. When I day trade, I only day trade off the 5-minute chart. If I'm scalping, I'll scalp off the 1-minute chart. So yeah, hopefully answers your question. Okay. So second chart or third chart is Fubo. Fubo had pretty darn good earnings, if I remember. Yeah. Fubo shares are trading higher after the company reported better than expected Q1 sales results and issued Q2 and full year 21 sales guidance above estimates. So not only did Q1 come in really strong, but it came in so strong that they're saying, hey, for the rest of the year, we should have really strong sales. That's a very good positive news catalyst. So when I look up Fubo in the news feed, here's the numbers that I can see. Sales of 119 million, estimates were 103 million. That's a beat. Subs up 105% year over year. That's a beat. Seeing Q2 sales up over 20% above estimates. That's a beat. So, and then they're saying estimate sales for the year, it was around 472 million. Now they're saying it's going to be about 525 or 30 million. All of this is bullish across the board. Very good news. So our top ones right now are going to be OXY and Fubo. LHDX doesn't have a positive news catalyst, so we're going to pass on this one right here. So let's take a look at OXY and let's take a look at Fubo. All right. So looking at OXY on the weekly, there's definitely some support right around 2457. And you can see that on the weekly time frame here, 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 which launched it here. This selling, this corrective pullback, found a bid here. Buyers absorbed it here, pushed it up. And on this intraweek pullback, it bought that dip. So we know that there's support right around this 2464. We're a little bit away from that. We're at 26 right now. So is there a potential day trade today? Let's take a look at the 5-minute chart. Actually, let's look at the 1 hour real quick. Okay. So here's that base of support we were talking about, how the selling pressure was just absorbed by the bids here. We bought this yesterday, I think, right around 24.71. So right now we're up about $1.20 on our trade. We felt like this line in the sand was going to hold. That's why we bought it. We shared this live trade with our members in real time. And so, yeah, we're up about $1.40 right now, which is nice. So I like this buying off this 24.25 area. We do have some overhead resistance here between 26.77 and this peak here at 27.92. So if we are going to day trade this, we're going to probably want to take some profit before this and this resistance here. You can see it here, and you can see some of that resistance here, support, resistance, resistance, support there. And then if we get past this, we'll definitely look to take profit ahead of 28. So OXY's got some potential medium-term swing play on it, but let's take a look at the 5-minute for day trading. So pre-market, not a whole lot of activity on Occidental, not a whole lot of volume coming in, but on the open, a lot of volume came in off the 24.57. That is incredibly strong buying. Now let's look at this here. It's floated above the 9 EMA the entire time, and this is the first real bearish candle. So we've held above the 9 EMA the entire time. We will look for a potential pullback to the 25.76 9 EMA as a potential long. We want to be watching time in sales, and we want to be watching the level 2 to see if when the market gets here, do we see bids starting to step up? Do we see size starting to come in on the bid? Do we see the offers getting smaller and smaller on the tape? If we start to see that around this level, then we will look to get long. If the 9 EMA fails, then our next location for potential long is going to be the VWAP. VWAP on very bullish moves, very bullish days, often tends to hold the first pullback. And so if we get to VWAP, and again, we see on the time in sales, we see strength coming in, we see bids getting strong, we see size coming in on the bid, and we see the offers get smaller and smaller, that will tell us from an order flow perspective that the market is saying, hey, we're buying this dip, we're going to absorb the selling pressure, and we're going to push it higher. So that's how we look to day trade OXY right now. If we do get a buy at 25.58, we'll probably take a little bit of size off at 26.10 because there's been a decent amount of selling pressure. This is down, roughly 30, 40 cents from the highs. If it doesn't recover this really soon, then we're going to have to wait for this to stabilize on a pullback to get long. Gareth G has a question, and you can post them in Q&A. I am reading the chat a little bit more than the Q&A, but no problem. So question, what indicators are you using on the chart? Okay, so we mentioned earlier, we're using the 9 and 20 EMA for day trading, and that's this green line, and that's the 9. The purple line is the 20. I look at the 9 as a high momentum type indicator. When the market is pushing aggressively and it's just floating above the 9, the only way you can mathematically do that is if you have a high momentum move. So anytime I see consistent pushing above that, that means high momentum. And a high momentum move Do you look for pullbacks or you do trade breakouts? What do you think? Anyone can answer this question. So if put a one in the chat if you think you should trade breakouts. Put a 2 in the chat if you think you should take pullbacks. Akira is saying pullback. Okay. What else do y'all think? Just put a 1 or 2 in there. Hassan's saying 1 for breakouts. Okay. Who else thinks 1 for breakouts and who thinks 2 for pullbacks? You don't get any points for not answering. And there's nothing wrong with being wrong. You're all in the learning process. It's all good. Wow, nobody wants to answer? Come on now. You guys have some cojones. I know you can do this. Okay, there you go. Andrew's saying 1, Gareth's saying 1, Bogdan's saying 1. Copy that. Okay, the correct answer is 1. Why do you trade breakouts in a high momentum move? Because high momentum moves don't pull back. If a market's in a high momentum move, it's not going to pull back. So you don't look for pullbacks, you look for breakouts. Where is a breakout setup here? Right here. That's a breakout setup. That is a breakout setup. If I were to highlight this on TradingView, and then we switch to a 1-minute chart, this breakout will start to appear more clear. Does it look more clear now? Can you see how perfectly that was resistance? Then it was, you can even see a micro breakout right here. Breakout, pull back to the same level. Clearly have resistance here. Builds pressure, breaks out, pulls back right to this, and then launches. So we trade breakouts, not pullbacks on high momentum moves. Now, right now, the gold line is what we call VWAP. So to answer your question here, the other indicators on this chart is VWAP, volume weighted average price. Comes free with TradingView. And this is volume. So that should be free with TradingView as well. All these indicators are free. The way these lines are showing up, if we're above the 9, it's high momentum. If we're above the gold, it's medium momentum. If we're still above the purple but below these two, we're at low momentum. So these are kind of like my 3 lines in the sand. If we had a bullish move and we get back below this, I'm no longer bullish, and I will have to wait for it to recover the purple line for me to want to get long again. So that's a very simple day trading filter and technique you can use. If the market's ripping and it's above the 9, only trade breakouts. If it's below the 9 but above the gold VWAP, then you look for pullbacks. If it's below the first 2 lines but above the 3rd line, you look for deeper pullbacks. And if it's below all 3, you don't look to get long until it recovers that. That's a very simple technique that anybody can learn and use. Okay, Peter Wright has a question. Hi, Chris. With TradingView, do you have to subscribe and pay for the scanner? I don't know, to be honest. That's a good question. I think you can get the scanner free. I think you can get it free on the basic subscription, but to be honest, I don't know because I've only been a paying subscriber. So I honestly don't know. That would be a good question to ping them for. I know you can get a free chart, but I don't know about the scanner. I've looked at TradingView once before. Can get a free chart or pay it. You can get a free chart with TradingView for sure. You can get free charts with them for sure. But they generally only, if you get free, I think they only allow 1 chart at a time. They won't allow you to have like 2 screens, 3 charts, 4 charts. So yes. And you might be able to get the stock screener. That'd be something to ping them for. He's saying, also, I would like to get a volume indicator in TradingView. I normally trade Forex, Euro, US dollar. Okay, so Forex market doesn't have centralized volume. So any volume they have is going to most likely be limited to your broker feed. That's the problem with the Forex market. That's one of the things about the Forex market. I got my chops trading Forex. I was a Forex broker on Wall Street. I have been trading Forex since 2000, 2001. So I understand your pain. I was bread and butter Forex. But once I realized that you can get volume and VWAP and all these other order flow information tools, I ended up switching to doing a lot more of my trading on stocks and options than Forex, simply because you get more tools. And to be honest, order flow is king. The most proximate driver of price action is order flow. It always has been and always will be. And so if that's the most proximate driver of price action, well, then it helps to know what's going on in the order flow in the market. And Forex just doesn't have that. So, and as Norman Slate says, you have to learn how to read the candles for Forex. Yeah, but I don't look at it as reading candles individually. I look at it as reading price action context. An individual candle in and of itself doesn't mean a whole lot. Every now and then one large candle will, but by and large, the most dominant order flow is never represented in one candle. It's represented in a group of candles. So Norman Slade, yeah, you got it. Group of candles. Yes. Yes. I don't trade candlestick patterns. I trade price action context and order flow. And our entire models for reading price action context are designed to help you see the order flow in the market. That's our entire model. And so I don't trade individual candles. I trade order flow and price action context. And so if you don't have those tools, if you're trading Forex and you don't have legitimate volume, and therefore you don't have VWAP, well, then, and you don't have legit time in sales, well, then you have to be a better technical trader to make money because you're trading with less tools. So that's why I shifted 90% of my trading to stocks and options, because I have those order flow tools. So yeah, Peter Wright saying, I didn't know you cannot get volume indicators in Forex. You can get the indicator, but it's only going to be broker feed volume. The Forex market is decentralized. So they don't have centralized exchanges that everything goes through, and they don't have centralized volume, so it's not transparent like the stock market, it's opaque. And so, yeah, that's why I switched to that. Norman saying equities seem to be easier than Forex. For sure, without a doubt. Once I switched to trading stocks and options, my income went up exponentially. Like, it wasn't even close. It wasn't even close. After our first full year of stock trading, it wasn't even close. It was like 500% more profits in trading stocks than FX. So yes. Chris is saying, are those reverse psychology or Ed's saying, Chris, are those reverse psychology candles? What do you mean by reverse psychology candles? I'm not sure I understand that. Could you help me out? I'm not sure I understand what that means. And then Norman Slade says, why is that, please? Why is what? Can you refer to what specifically? That would really help me to understand your question. By the way, Adinda, how much time do we have for this? Do we have another 20 minutes? I just want to make sure I got 10 minutes. Oh my gosh. Okay. Running out of time. Okay. Forex versus equities. Okay, why? Could you help me? Could you just write the full question? That would help me out, Norman. Let's check in with Fubo real quick. Fubo's not at my buy level. I have a potential buy level around 1869, but Fubo's drifting. Not really bullish. Now, let's use the same model we talked about before. So, the majority of price action is below the 9 EMA. Strong momentum, but we still had some penetrations into the gold, which is the VWAP. So, do we look for breakouts? No, we look to trade pullbacks. So right now, if we're going to trade Fubo, I'm going to trade it short term to the short side while we're below these lines, and I'm going to look for pullbacks. Akira and Siki saying, I think you need 2 hours, so much to cover. I know. There's a lot to cover. Honestly, I could spend, days talking about day trading. Like, I could do webinars for days on this. There's just so much information. That's why we did our course, because we wanted to boil it down into much more essentials. Norman's saying, you talked about more money in equities. Why is there such a difference? I think there's two major reasons. One, you have more tools in equities than you do Forex. I have legit volume. That's important because that gives me order and flow information. I have VWAP, important indicator for stock trading. I also have open interest in options, very important information. That's order flow information. So I have more tools. That's the first reason. The second reason, I got more volatility. Like, look at this volatility. 30% move on the day, 5%, 77% move on the day, 11%, 10%, 19%, 11%, 5%, 7%. How many Forex pairs are moving 10% on a day? Maybe one? Maybe? Maybe? And also, if you think about it like this, how many Forex pairs are there in the market? About 180 roughly. Okay, how many does your broker offer? If you got a really good broker, they have maybe 100 pairs. Okay, so you have 100 pairs, but how many of them have movement and spreads that you would really be worth trading? Like, how many? You're not going to want to trade dollar Turkish lira on a regular basis. So you're talking, when you whittle it down to, you're talking about maybe 40 pairs. Okay, you have 40 instruments to trade, and volume or volatility on those is maybe 1%, 2%. I'm getting stocks that are, and look at this whole list right here. This is what, 20 stocks? 6%, 16%, 7%, 6%, 18%, 11%, 6%, 74%. I get more volatility in stocks than Forex. I have more instruments. You have 30,000 stocks versus 40 Forex pairs. And you have more tools. So those three reasons alone make trading stocks way easier. When I first came to stocks, I was like, oh my God, I have volume, I have order flow, I have legit level 2, I have VWAP, I have open interest, I have better volatility, I have more stocks. I was like a kid in a candy store because I had been trading Forex my whole life. And so once I started coming over stocks, I'm like, oh my God, I have so many more options now to trade. Way more opportunities to make money. I actually don't think Steve Neeson is that good about understanding price action. He's technically the candlestick expert, but the guy's never produced a profitable track record. And when he was questioned about it, he couldn't provide one. I actually don't find Steve Neeson to be that good. I think his candlestick stuff is bogus. Most of those candlestick patterns were tested. Most of them failed. Like, most of them failed. So I actually don't. He's considered the candlestick expert, never produced a profitable track record. Not 1 year in the last 30 years has he produced a profitable track record. So I'm going to call BS on that one. Forgive it. No disrespect to Steve. Produce a profitable track record. Show me your patterns work. Fine. But you've never done it in 30 years, maybe 40. So, yeah. So hopefully answers your question, Norman. Ed is saying dark candles are up on your charts versus visually down. Okay. Yes. Now I get your question, Ed. Okay. Yeah. Okay. The reason why I do that is because, well, my degree is in neuroscience, and the color red tends to trigger these kind of like alert fear-based responses in humans. Most candle charts are red for down and green for up, but the red tends to trigger stronger neurological reactions. And so I don't do that. And so I look for colors that are going to create neutral neurological reactions. So blue is up and white is down for me. Plus, they also match the colors of my website. So there you go. That's why we use them. Now I understand your question. Norman has Akira and Siki. Can you please show us how to read timing sales in level 2? I show that for my members. That's a much longer class. That's the kind of information I only share with my members. Norman has another question. Is it really hard to trade Forex and hold overnight without fear of a loss? I don't have fear of a loss because I'm just risking a fixed percent. So 1% is 1%. It doesn't really matter to me. I don't have fear of loss. I've done tens of thousands of trades. This year alone, I've done close to 400 trades. We'll hit 1,000 by the end of the year. One trade doesn't mean anything to me. I'm not worried about it. to answer the first part of your question, is it really hard to trade Forex? I think it's harder than stocks for the aforementioned reasons we talk about. Norman saying, your class has been very helpful. Thank you. I appreciate it. Hassan saying, what is the spread for your trades? Usually most stocks I trade have a spread of a few cents. There are certain stocks that are pretty, large stocks that may have 20, 30 cents, but those are stocks that are moving like $20 on a day. Those are like $200, $300 stocks. Yeah. But most stocks I trade are under 3-cent spreads. Is it fair to ask about our? Not really, because that's not the point of this, but I don't really know much about them, so I can't really say anything about it. But from my experience, I did a video on this. Most of those companies, they make more money off of the fees they charge their students for potentially getting funded than they actually do from those traders making money. And so if you're making more money from something, that's your primary incentive. That's your business model. So yeah, that's my thoughts on that. Okay. How much more time do you got, Adinda? I think around 3 minutes, you said. Okay. So I'll do a few more questions. My OXY trade is killing it. We bought this literally yesterday, right here. That's where we bought it yesterday and shared that live trade with our members. And it's up now almost $2. Yeah. Okay. Peter Wright says, hi, Chris. When you say stocks are better for trading than Forex, what type of stocks are good? I don't focus on a particular sector. I focus on what's moving. I focus on what's moving and where the flows are. And that is always in rotation. From the bottom of COVID, March 2020 to February 2021, small caps were the best performers. And we even told our members this ahead of time. We told everybody in February, we said, hey, when the market does rebound, small caps are going to be the top performers. That's historically every single bear market in history. When they bottomed, small caps always outperformed. But that only lasts a certain amount of time, and then the outperformers shift to mid and large caps. And that's totally what's happening. So what we trade is always in rotation. We don't focus on one sector or one stock. We look for strength across the sector, strength across the leaders, and that's always changing. That's always changing. That's why it's important to have a scanning process that will help tell you what is moving and what is not moving. You're saying I've only been in the FTSE 100. That's a good index. There's a fair amount of stocks in there. I mean, obviously not as much as in the US, but the FTSE is a pretty good index and pretty good volatility. Yeah, if I was living in Europe, I would probably, my top day trading indices would be FTSE, probably CAC, DAX. Yeah, those are all good. Okay, we got about 2 minutes and then we got to wrap it up. Any last questions before we wrap it up? Meanwhile, shameless plug here. So if you want to check out more about what we do, if you want to learn how we day trade, if you want to trade my live trades, we have a trading masterclass where I share my live trades with everybody Monday through Thursday. We have a pre-market live stream. I am sharing my live trades in real time. We do webinars on Friday. So 5 days a week, you get to hear from me. We also have a swing trading channel as well, where my course instructor is sharing his swing trades. So if you want to know what I'm trading and how I'm trading, and you want to profit from like my OXY trade that I share with my members, then you can check out our trading masterclass. If you want to see what kind of content we have, just check out our YouTube channel at Second Skies Trading. We post now every single week live content. And so our next video is going to be Intro to Options Part 2. So that is where you can check us out and learn more about us. If you want to know more about us, check out our YouTube channel, check out our free content. If you like it, come become a member. So that's pretty much it. Any last questions before we wrap it up? Okay. So first off, I want to thank FX Street. Or saying, what's our website? secondskiesforex.com. If you, first off, I want to thank FX Street for hosting this. I appreciate it. There's some really good questions from y'all, so I appreciate the engagement. If you want to see me come back, let FX Street know, hey, we enjoyed that presentation. This was a good presentation. We'd like to see Chris back. If enough people say that, then I will be back. Hopefully we can do this once a month or something like that, and I can continue to do these great sessions with y'all. So with that being said, thank you to FX Street. Thank you to everybody for being here. Great questions, great participation. Good luck trading, and I hope to see you next time. Take care, everyone.